Okay, hi everyone. In this video, we're going to talk about private limited company or limited liability partnership. This is a question which we usually get from clients. They normally ask us this question: should I set up a private limited, which is typically called abbreviated as PTE Ltd or LLP. So, PTE Ltd or private limited company, right, has certain features which are quite similar to limited liability partnerships. A company is the most common form of business entity that people usually set up. It is one of the easiest things to understand. A limited liability partnership, right? Sometimes you may see in maybe accounting firms or law firms, whereby different partners come together, but in this structure whereby their liability is limited. Okay, so one of the similar functions or similar characteristics that private limited company or limited liability partnership has is this characteristic of separate legal entity. So what is a separate legal entity? It means that it is a separate legal person, or like for example, we are natural people. So people are natural persons, but this is an artificial person, which means that it is as though you are giving birth to another individual. Okay, so that means that like a company, right, or LLP can be sued in its own name, and it can also hold property in its own name. But of course, being a non-living thing, right, you need somebody to run the company or the LLP, and that will be in a separate video altogether. Okay, so the fact that it exists as a separate legal entity is one of the reasons why people normally come to us and compare these two business structures, right, and then they come to this debate about which one is actually better. The other similar function that a private limited company or LLP has is that both of them have limited liability characteristics. So let me give you an example. If let's say you are a sole proprietorship or a general partnership, what will happen is that if somebody sues the sole proprietor or the general partner, the liability is unlimited. That is because the sole proprietor, right, is actually the sole proprietor is actually the same and seen as one together with the business owner. So like for example, if you're a hawker, or let's say you are a tuition teacher, then you don't want to incorporate a company and you act as a sole proprietor, right? You can do business in your own personal name if it's the same as your NRIC or whichever identification document that you have. If not, if you are using a different name, right, then you have to register the sole proprietorship or the general partnership name with ACRA. Okay, so this limited liability function, right, is something that is similar to both private limited or limited liability partnerships. Okay, but here comes the difference between the private limited company and the LLP. If let's say we were to consider which one would be a better structure, right, then normally we'll encourage the client to go for private company. The main reason is because the private company has lower corporate taxes. So the highest end of the personal income tax rate is 22%, which is what you will be paying if you are a partner of the LLP. But in terms of corporate tax, right, corporate tax rate is a flat 17%, and there are tax incentives and rebates available. So especially if you are a startup, right, then your tax incentive and rebate will lower your corporate tax rate to maybe a single-digit percentage rate only. So the next thing is that there is the ability to raise capital. So the LLP is limited to the partner's contribution, which means that if a limited liability partnership wants to raise capital, put more money into the LLP, the partners have to come up with their own contribution. They can put their own money into the LLP. But the company, you can raise capital by selling shares, which means that you can actually raise capital by issuing new shares and then asking people who are currently not the shareholders or the current shareholders to purchase these shares as well. So in Singapore, we don't have this thing called like authorized share capital, which means that in certain jurisdictions elsewhere, not in Singapore, there may be a authorized share capital whereby you hit a certain share capital, right? Then you can't raise any more share capital. So there's no limitation to this to the company here. So what happens is that in any point in time whereby the company it has insufficient funds, right, they can actually go out and sell. They can raise capital by creating new shares and selling these shares. The next thing is that the LLP being a business organization that has no shares, therefore you actually can't transfer ownership. But in a company, right, the ownership is held with the shareholders. So the shareholders can have the right to buy, sell, transfer, or will their shares to their beneficiaries. So in this aspect, right, the company can transfer the ownership or transfer shares rather freely, still restricted by certain terms in the Constitution and the Companies Act. But in general, right, shares are transferable between buyers and sellers, or people can will or transfer their shares to their beneficiaries as well. Okay, so if you are looking to register a company or need any advice on whether company or LLP, you can always look for us. This is our email address, and you can actually call, WhatsApp, or SMS at this number as well. So that's all, and we'll see you at the next video.